Okay, Jason, let's get started. I'm recording this, so you can either go back and listen to it later on, or and also for our two other members of this directed study class who are not here this evening, they can pick it up later on. Jason, tonight we're going to be talking about finishing up our what is accounting and introducing business transactions to our studies. We'll be talking about problem 1-7A, which is going over the basic accounting equation that was in my video of earlier this week, and also introducing some quiz work that you need to do in the next week to practice some of this. That'll lead into another video that I'll be posting over the weekend, which is going to talk about chapters 3 and 4. And those are going to be completing the accounting cycle. These first 3 weeks of our directed study class, covering 3 class sessions on last week, this week, and our next class is not until June 30th, is to talk about the accounting cycle. That's the key part of financial accounting, the accounting cycle. So that's what we're going to study over the next couple of weeks. We're going to do 2 quizzes to practice that accounting cycle, a quiz this week and then a quiz next week. My syllabus is a little incorrect. The quiz dates are due every Wednesday. So this quiz that I'm giving you tonight that's posted in Blackboard is due a week from yesterday, June 22nd at midnight. If you need extra time, all you have to do is send me a quick email. Mr. Hassey, can I have a few extra days to do this? That is no problem. So the due dates are not a big stickler in this class. Just make sure you get the work done and posted. And then after that, we have another quiz to complete the accounting cycle, which will be given next week and due Wednesday, June 29th. With those 2 quizzes, you'll have enough significant work to basically complete the first half of our accounting class and be prepared for the midterm over the 4th of July weekend. Ho, ho. Okay. So that's where we are. So I'm going to go over some problems tonight, and then a video will talk about some additional problems over the weekend. And if you have any questions or concerns, Jason, just give me a shout out. Okay. All right, let's take a look at some of this stuff here. Just a couple infrastructure items here. Here's our Blackboard. And hopefully you're getting somewhat familiar with it or more confused. Just let me know if you are getting confused by it. Whenever you have a question on the work or need some help, you can email me, but also you can post a question to this discussion forum here. When you want some questions answered, you just post a form, create a form on this, ask me a question. I check this every day. You can get some answers. And also the thing about this form is all your fellow students can see it as well. Now, if you want a more personal or individual question, you can just send me an email directly to rhassey@laverne.edu. Our quiz for this week is now posted to Blackboard. You can download it. I've given you a couple of things on my quizzes. I give you a Word doc version and a PDF version. It's the same quiz. I just give it to you in 2 formats. Some students like working in doc. Some students like working in PDF. Doesn't matter to me. But the key thing about this quiz is, and we'll take a look at this in the last part of our session tonight, is I give you a Excel spreadsheet to do your accounting transaction work on. It's already formatted. All you have to do is put in the dates and the numbers and the accounts. It's already formatted, so you don't have to worry about writing it out. All you have to do is open up that spreadsheet and just answer the questions in the format that I've given you. That saves you a lot of time and a lot of grief. So make sure when you look at this quiz, every one of our quizzes and examinations are similar. I will give you a spreadsheet formatted already. All you have to do is put in the information requested. So that's a helpful hint. Also, it can help you apply the questions to the textbook and the problems that we review. So all you have to do is download this quiz, do your work on it, and then post it back to this file folder. Now, again, I don't know what your Blackboard experience is in this class, but let's say you complete your work, you have a Word doc file, and you have the spreadsheet file. You've saved them to your desktop or to your hard drive. Then all you do is you open up this file folder by clicking on the table, and up comes an upload version of Blackboard. Then all you do is drag the files over here to the attached files, or just go to browse local files, find your files, hit open, and then they'll upload your work files to this work. But don't forget to hit submit. You hit submit, then I will get your files and I can grade them. Also gives you a little area that you can tell me to go to hell, or that I'm a great guy, or nothing. But the key is making sure you post your files, and you probably will have two. One file for the format of the questions, and I'll show you those in just a minute. And then the spreadsheet file where you'll be doing your business transactions on. That's a key. Okay. And then once you've loaded up, hit submit. And again, as I said earlier, June 22nd is a soft close, as they say in the business. You can have additional time if you need it. And then we get to this week, number 2. Here's our agenda that I showed you at the beginning, and here's some very helpful videos that talk about business transactions and that ugliness of debits and credits. And we're going to talk about that tonight as well. But there's some good videos there that might help the student. Remember, I mentioned at the beginning of class that we're studying these first few weeks the accounting cycle. This is the accounting cycle I meant. It's 8 steps that every company in mankind and womankind have to prepare on a monthly, quarterly, annual basis. They have to record a business transaction in a journal entry. They have to post that entry to what is called a general ledger. They prepare a trial balance of the general ledger balances. Then they do adjusting journal entries. Then they prepare another trial balance after those adjustments. Then they prepare the financial statements, income statement, statement of owner's equity, and balance sheet. And then they close the books, closing all the temporary accounts. And then they prepare one last trial balance of the accounts that remain. Ladies and gentlemen, this is done every friggin' month in every friggin' business in the world. If you don't do this, if you're a public corporation, you're breaking the law. If you're a private corporation, you're not going to get any Shark Tank funding, I'll tell you. You're not going to get any funding from any hedge funds or venture capitalists, because you're not going by generally accepted accounting principles. That's the rule. You're not going to be a legitimate business unless you do these things. Because why? People think you're a crook. Matter of fact, some companies do this and they're still crooks. That's why we have public auditors, independent auditors, to check this. But for our class, Accounting 203, the first section of financial accounting, this is what you need to know. And this is the first 4 chapters of our text and the first 3 weeks of our studies this summer. If you want to be a business administration major, if you want to go on to get an MBA or a master's degree, if you want to run a department or run a business or have some position of strategy and control in a company, if you don't know these 8 steps, you're up the creek. It ain't going to happen. Even though if you're in marketing or if you're in finance, you don't actually do these 8 transactions. But if you don't know these are going on in your company and what they tell you, you're still up the creek. So that's why this is huge. All right. So please spend time these first 2 weeks, especially this weekend. This is what the quiz is talking about this week. It's making sure you begin to understand. This quiz number 1 is only on the first 3 steps. record the business event, post to a ledger, and prepare a trial balance. That is on your worksheet that I provided you for this quiz. Quiz number 2 is doing the remaining 4 through 8. And that will study and practice that over the next 2 weeks. Your midterm examination is going to be one company doing all these 8 events, and you'll be doing it. So that's what your study guide is over the next few weeks. If you got a handle on this from your textbook, from the review problems that are posted in Blackboard, from the videos that are provided by me, from doing the quizzes, you'll be in great shape. If you get lazy and take advantage of the summer and watch the Dodger game instead of studying this stuff, you're going to struggle. Trust me. Because remember what I said last week in our very first class. This is a new language. It's like studying French. It's like learning Latin. It's difficult, especially if you don't do it on a day in, day out basis. That's why you have to practice and do your reading and look at the information provided in the Blackboard. If not, it's going to be a long, troubling summer. But if you do the work now and do your studying for quiz 1, it's going to be a very relaxing and nice summer. I've been teaching this stuff for 28 years. Trust me, I know. When I see a student, and Jason, you don't have that look, but when I see a student on Zoom or in a classroom that has that deer in the headlights look in week 2 and 3, I know they're in for some trouble because you don't study and understand it. Yes, this isn't the most sexy thing in the world. This is not learning how to sell soap. This is not learning how to raise $10 million on the stock market. But if you do not know the accounting cycle, you won't be able to sell soap, or you won't be able to invest and manage in the stock market because you have to account for your activities in your business. If you don't, you're either going to be arrested or go broke, probably both. So that's a key. As you can see, I can't stress this enough to the 3 students who are participating in our accounting class this summer. I can't, just because we're only 3 students and just because we're directed study, you don't get this under your belt, your business degree is worth bumpus. Excuse me for being frank, but that's true. If I'm in an interview with a student, and I don't care if it's a marketing job, a finance job, an IT job, a supply chain distribution job, and I go, by the way, what's accounts payable? Huh? What are you talking about? What's that got to do with supply chain? Well, in order to get the supplies in your product, you got to use accounts payable. What is it? Damn, I should have paid attention to Hassie's number 2 step in the accounting site. This is key. If you go to work for a bank or some financial institution and they say, hey, what's the balance sheet? Huh? What's the balance sheet? I'm paying you $80,000 a year to work for our company. What's the balance sheet? It's when things are in balance. Get the hell out of here. You need to know this stuff. I'm trying to make light of this, but it's important. And I can't stress just these 3 weeks or 4 weeks will help you throughout your whole business career. And you laugh at that now, but trust me, I'm right on this. And I wouldn't be telling you if I'm not right. Okay. So this is something to your starting point in your review for this week. Then I have the PowerPoints from the chapter. I have solutions to these problems that you can review and look at from the chapter. Remember, we're using the 24th edition. Where is it here? I got it right here. We're using the 24th edition, Fundamental Accounting Principles. If you have that text, again, you don't need it. If you don't want it, you don't You don't want it. But if you have that text, look at those review problems. They act as wonderful templates for the quizzes and the midterm because everything's done on your own at home. So you get a problem on quiz number 1, you go, what the hell is Hassey talking about here? I don't know what's going on. You have to go to the textbook to find it. All these questions are taken right out of the textbook. You're going to have to do some research. So that's the key to directed study. Okay. That's a pretty good infrastructure review of where we are, where this stuff is, what you got to do, all right, for this coming week. Cool? Cool. Now let's take a look, before I get into a review problem, let's take a look at what the quiz is trying to do here this week that you have to do. The quizzes are basically glorified homework. It's like homework on steroids. The steroids mean they count a little bit more than homework, but they all are there to prepare you for the midterm and the final examinations. They're there to practice, and so you know, oh, I got this. Or if you don't know, you're only going to lose a little small amount of points before you lose a lot of points on the midterms. So they're there to practice. And here's the quiz. It's 4 questions, 4 parts. You can do 3 of the parts right on the Word document that I give you. The third part is a spreadsheet, and I'll show you that in just a minute. So I'm asking you to look at definitions and information from the first 2 chapters of our study. I want you to tell me of these 4 financial statements: the income statement, statement of owner's equity, balance sheet, and the statement of cash flows. Where do these items appear in which statement? For example, assets. Is it a statement of cash flow account? Is it a balance sheet? Is it a statement of owner's equity? Is it an income statement? I want you to tell me which financial statement these activities and headings go. That's number 1. It's taken right out of the textbook. Part 2. Oh, here's a company called Mason Company. At the end of the past year, reported the following amounts in their accounts: owner withdrawals, revenues, expenses, and owner investments. These are all in dollars. If the beginning equity of the year was $173,000, if you started out the year with $173,000 in equity, and then these additional activities occurred, tell me what's the ending equity balance for Mason Company at the end of this year. You started out with $173,000. You had owner withdrawals, revenue, expenses, and owner investments. What's the balance now at the end of that period of time? 1 number is all you have to give me. I'll skip over 3 and go to question 4. I used to hate these questions when I was in college. Ugh, I hated them. Matched, but they're a great tool. Matching the following definitions in terms. These are definitions here of terms here. Place the letter that identifies the best definition according to these. So what's the definition of generally accepted accounting principles? Is it A, B, C, D, E, F, G, I, J? So you want to find the definition that matches these terms in the problem. Again, right out of chapter 1. But a good learning tool. And then we get to the third problem. And this is the one that you're on your own. The good thing though, I gave you a spreadsheet that's all set up. Remember, I just showed you the accounting cycle. This is the first 3 steps of the accounting cycle. You record the financial transaction on each one of these dates in what is called a journal entry. Then you put those journal entries into a ledger of the accounts. And then when all these entries are done, May 1 through May 9th, then you take all the account balances in the general ledger and prepare a trial balance. May 1st through May 9th, that's what you're doing. These transactions, these basic business transactions to practice these first 3 steps of the accounting cycle. Now, let's take a look at that spreadsheet that I have provided you. Here it is right here. Thank you, Mr. Hesse. God love you for setting this up for me. It's 3 tabs. The journal entry tab, the ledger tab that I all set up for you. All you have to do is put the transactions on the debit side or the credit side of each one of the columns. And the trial balance, where I list all the accounts. And the trial balance you're going to take, once you post everything to this ledger, you're going to take the ending balances in each one of these accounts, be it debit or credit, and put it into the trial balance. And the bottom line of all this is these 2 amounts here, the debits have to equal the credits. Then you're in balance. The first 3 steps of the accounting cycle. Record the transactions here by date. I give you in the problem all the accounts, and you can see those accounts right here. These are all the accounts you're going to be using. Record the event, post it to the ledger, and record the trial balance. Save it and post this file to Blackboard. Don't wait for Wednesday at 6 o'clock next week to do this. First of all, as soon as you see this video, you should start doing this quiz because it's all going to be fresh in your mind. So you should really start knocking this out in the next couple of days. Then if you get confused, you can go back to the video. I'm also going to be doing another video this weekend that's going to go over problem 2-1A, which practices recording these transactions. But try to make sure you get a lot of this done, because if you wait to the last minute, you either forget it all or you won't give an RA. Try to do it as soon as possible in the week, but you have extra time if you need it. So that's the spreadsheet that's attached to the quiz file folder. Download that and do your work for just part 3. Parts 1, 2, and 4 can be done on the quiz itself. Jason, any questions on this? Attaboy. Okay. Now let's take a look at a problem that kind of talks about this. We talked about this in our opening video. This is problem 17A, where it lists on the top the accounting equation. Assets equals liabilities plus equity. We talked about that last week. And then it lists all the accounts: cash, receivable, equipment, payable, capital, withdrawals, revenues, and expenses. Now, this is not an accounting transaction. This is not what you're doing in part 3 of quiz number 1. But what it's trying to do is show you how this kind of all works. This is what chapter 1's all about. Kind of show you what we're doing here. And remember, one of the key things I talked about last week is that you have to understand that this is a new language. It's a language that you have to take business events and convert them into a language of accounting that shows things. Every event, if you notice, every date here has at least 2 things happening. 2 things to every business end. Now, some things happen on one side of the equation, but every transaction in business has 2 events going on. That's number 1. And number 2, the biggest hassle for first-time accounting students is say, well, what the hell? I don't know which accounts to use. What account do I put these in? Well, that information will always be given to you. You don't have to figure that one out. If you were an accounting major, you would have to figure that out. but you're not an accounting major. That's why you're taking this class. So I will provide you all the accounts. Now, your textbook on page 34 has this problem. And the very first transaction, it says, and this is one of the biggest hassles of the first week of studies of accounting. You have to take an English sentence and transfer it into accounting language. G. Graham invested $40,000 cash in the company. Well, G. Graham is the owner of the business. So he's investing cash and equity called capital in the business. He's setting up the business. Cash increase, equity increased. The company rented a furnished office and paid $2,200 cash for the rent in May. So they rented office space for $2,200. They wrote a check, notice here, minus cash, $2,200, and then minus equity expense, $2,200. Equity is being reduced because money is leaving the business for expenses called rent. Notice we're lowering cash and we're paying the landlord. The company purchased $1,890 of office equipment on credit. And this goes back to what I was just taking a few minutes ago. On credit means accounts payable. We're buying office equipment, increasing office equipment. At the same time, we now owe $1,890, which we have to pay in 30 days. When you use that credit card today at lunch hour to buy your lunch, you did the exact same thing. You now owe that amount of that lunch, and that lunch would be considered an expense for you, lunch. But you now have 30 days to pay that credit card. Credit cards are just like accounts payable. You have to pay them off in a certain amount of time. If you don't, you got to pay a late fee or interest, or both. The company paid $750 cash for this month's cleaning services. Again, cash is being reduced and we're paying an expense called cleaning. Notice money is going out and equity is going out called an expense. Well, now equity is coming in on May 8th. The company provided consulting services for a client and collected $5,400 of cash. They deposit that cash in their bank account, increase, and they now have received increases of equity called revenue, $5,400. Money coming in, revenue, money going out, expense. Here comes another type of revenue. The company provided $2,500 of consulting services on credit for a client. On credit. They owe you the money. And that's where we have another asset account called accounts receivable. And it's still revenue. This is one of the things that students have to understand. It can be revenue for cash. It can be revenue on credit. It's still revenue. You provided a service. Here, they're paying you right away. Here, they're paying you in 30 days. Damn. After a while, this stuff kind of looks cool, especially after about 3 beers. All right, May 15th. The company paid $750 cash for a salary of an assistant for the first month, half of the month. So now they're paying payroll. $750 going out, $750 going out called salary expense. And so on through the rest of the month. Now, Walmart or any business does not keep their books this way. They use debits and credits in journal entries. Debit cash, credit capital. Debit expense rent, credit cash. Debit office equipment, credit payable. Debit cleaning services, credit cash. That's what we're doing in chapter 2. That's a journal entry. But this format is to have you, the student, first time seeing this, can get a feel for how this all flows. Remember, a debit is the left-hand side of an account. The credit is a right-hand side of the account. It means nothing else. Debits increase cash. Credits reduce cash or assets. Debits reduce equity expenses. Credits increase equity. Left hand and right hand side. We're going to talk about that in just a minute as well. So take a look at this problem 17A just to get a feel for the transactions. And then once all those transactions are done in May, you have the totals. $42,780 of cash. That's how much money should be in your checking account. You have $1,970 of office equipment. You still owe $80 on accounts payable. The owner has invested $40,000 in the business. The owner has taken out $1,400 of withdrawals from the business. You had $11,100 of revenues and $5,030 of expenses. Add all these up, the assets will equal the liabilities and equity. You're in balance. And then you tell the world what happened by doing the financial statements right here. Notice the income statement, a statement of revenues and expenses right here. $11,100 of revenues, and $5,030 of expenses. The Graham Company made $6,070 in the month of May. They had a good month. The statement of owner's equity. They started out the month of May with zero. The owner invested $40,000. The owner made a net income of $6,070, the difference between revenues and expenses. And the owner withdrew $1,400 out of the business. So the owner's equity at the end of the May was $44,670. Investment, profits, withdrawals. And then this $44,670 is now part of the balance sheet, the equity balance of the company, where you have your assets, cash, $42,780, office furniture, $19,770. We have assets of $44,750. Our liabilities, what we owed, we still owe $80 accounts payable. And we have the $44,670 of equity. And golly gomer, it's balanced. In a very small and simple version, we just completed the accounting cycle. We recorded the business events according to accounting principles of assets equals liabilities and equity. We recorded those in a financial statement that tells the world, hey, we made a profit. The owner of this business has $44,670 of equity. They have $44,750 of assets that they own. And the good part of that is $42,780 is in their bank account. And there's their balance sheet. This leads us into chapter 2, where we record these in the terms of a journal entry. And what does that mean? Let's take a look at that. Mr. Hasse, I'm sure glad you're recording this. What is an account? Cash account, capital account, expense account, revenue account. An account is a record of increases and decreases in a specific activity, asset, liability, equity, revenue, expense. The general ledger is a record of all accounts used by the company. You have all your asset accounts, your liability accounts, your equity accounts. They all have to be in balance. There's examples of your assets, examples of liability accounts, things that you owe, examples of equity accounts. You always have to make sure these are in balance after every transaction. So here's a company's chart of accounts. It lists all the accounts that they use in their business. And now they're going to record the transactions or activities of these accounts by either debiting, which is the left-hand side of the account, or crediting the right-hand side of the account. This is huge. If you have your textbook, rip this page out and keep it. This is the basis by which we're doing the accounting cycle. Remember, we have to say assets always equal liabilities and equity. How do we record these events? We debit assets to increase them. We credit assets to decrease them. And it's vice versa on the other side of the equation. Debits decrease liabilities, credits increase liabilities. Debits decrease equity, which are expense accounts and withdrawals, and credits increase equity, which are owners' investments and revenues. If you keep this simple phrase or this simple dialogue, you'll be able to sort all this out if you're looking at transactions to record. This is huge. Take a picture of it, rip it out of your textbook, write it down, whatever. This is paramount to understanding. And one of the biggest problems, I probably shouldn't say this, but it'll confuse students by me saying this probably, but don't think of your checking account statement that you get from Wells Fargo every month online or they mail it to you is the way of understanding debits and credits. Because remember, the bank statement from Wells Fargo is a statement for Wells Fargo, not for you. So where it says credits at Wells Fargo, those are really debits for you. Remember, if you increase your bank account, they credit it, but really that's a debit. You're increasing cash because bank accounts are liabilities for them. Customers are putting money into their account. They now owe that money back to the customer in whatever services or checking services they have. So if you try to understand debits and credits by looking at your bank statement, you're going to get yourself confused because it's they're doing it for them, not for you. So you have to take a look from it from this perspective. So again, here's another, this is called double entry accounting. For every business event, two things happen. And notice all the things that could go on in the equity account. Owner investment, owner withdrawals, money coming in for revenues, money going out for expenses. The normal transactions are debit expenses, credit revenues, debit withdrawals, credit capital. Credit liabilities, when you borrow money, it's a credit. When money's coming in or you're buying assets, it's a debit. Study these until your eyeballs fall out. It makes everything a lot easier to understand. Here's a general ledger for a cash account. These are all the cash accounts, cash transaction during a period of time. Some occurred on the left-hand side, cash coming in. Some occurred on the right-hand side, cash going out, credits. The balance in the account at the end of the period is the difference between the debit totals, 36,100, and the credit totals, 31,300. The difference then, cash has a $4,800 debit balance, which is a good thing. If it had a credit balance, that means you're overdrawn. A debit balance means, oh, we got $4,800 in our checking account, and now when we get our bank statement, we can verify that when we reconcile the bank account. Oh, okay. Every event, something's going on. And this is what I was talking about, journalizing transactions. This is a general journal entry where the owner invests $30,000 in the business. Debit cash, credit capital. The date, the account, the amount. We purchase supplies for cash. Debit supplies, credit cash. We now own we're converting one asset, cash, into another asset, supplies. Here's the general ledger account for those transactions. Cash coming in, there's the balance. Cash going out, there's the balance. This is a general ledger. So when you record a transaction, it is immediately posted to the ledger. This is the general journal. You have to do this in quiz number 1. You record the transaction, and then you take those amounts and post them to the debit side of cash and to the credit side of capital. You're now posting those to the ledger. And then when you're done with your ledger, this is part of my video over the weekend, so I'm going to skip through this. You'll see this over the weekend. When you're done with this ledger, then you prepare a trial balance. You take all the balances in your ledger and list them. What are the debit balances? What are the credit balances? And whew, they equal. All this tells you is that your accounting equation is in balance. And you can go further on into your business. This is like a quick check. I remember a couple months ago, I saw the chief accountant at University of Laverne. I said, hey, how you doing? She goes, oh, it's a bad day. I go, let me guess, your trial balance is not balancing. How'd you know? I teach accounting. And when an accountant is really upset, it means that something's wrong in their books. And I know, we got to go through all our transactions to make, we posted something wrong. It's not balancing. Yep, tell me about it. I know what you mean. Trial balance is a quick check to make sure that you've done everything properly. And that is key. Remember, in accounting, just like in any other business activity, you're always accountable on a daily basis. You screw up, you can fix it. But if you keep screwing up and don't fix it, it gets a lot worse. The trial balance helps you from screwing up. It corrects. It makes sure you correct something before it gets even worse. So those are the key parts of our quiz. Definitions and these 3 events: journal entry, general ledger posting, trial balance. And I'm going to give a sample problem in my video this weekend, which is problem 2-1A, which the problem is already posted in the Blackboard, that gives a perfect example of this process. Problem 2-1A, and my video this weekend will be going over that. I'm going to stop here because if I talk about any more about this, your heads will explode. I've seen it happen, and it's an ugly incident. So this is what you need to know. So reviewing, again, this is a very good PowerPoint from chapter 2, and that's posted in Blackboard too. But you have this video. You now have all the information in Blackboard. You have videos in Blackboard to review. You have the quiz in Blackboard to do. But I would take a look and study this information that I'm throwing at you all at once there over the weekend, and then start doing your problems then. Here's the accounting cycle that we've talked about. We're doing the first 3 steps this week. So what I urge you all to do is just review this material and then take a look at the quiz. You might be able to kick out some of those questions like 1, 2, and 4 by just going through the textbook or even following the videos that I've done the first 2 weeks. And then you can attack that spreadsheet problem and try to go through it. So we looked at problem 1-7 as an example of this tonight. I'm going to be doing problem 2.1 as an example of journal entries and ledgers over the weekend. Probably post that on Saturday, not early Sunday. Have that to look at, and that'll get you all prepped to do your quiz work for next week. Now, next week, a week from tonight, we have no class. You'll be getting an ugly mugshot video of me talking about the rest of the accounting cycle. Jason, you have any questions, sir? Nope. Okay.
No question. Thank you.
Okay. Tell me I don't know what I'm talking about here. Tell me I don't know what I'm doing here.
I spent about 30 minutes trying to figure out where to stump you, but I think you're good.
I'm just teasing. Okay. So that's where we are. A good start to start studying this weekend for Stayan and Tori, who are not here tonight. They were here last week. And so please review this video. If you have any questions, concerns, I'm around. Send me an email, post to the discussion forum. But now you should be able to have the basics to start your quiz work and practice this stuff over the next week. And then we'll pick up to another level of this in the accounting cycle next week. No class next week, but about an hour and a half long video. Okay? All right, Jason, if there's nothing else, I appreciate your attendance tonight. Thank you. See, I'm within our 1 hour area. Very, very good. And again, if you need any help, let me know, and we'll talk to you on the internet this weekend, and we'll see you down the road. Okay, Jason? Thank you, sir. Have a great week.